All right, how's it going, everyone? This is Anon. None of this is financial advice. This is for entertainment purposes only. So I'm just going to jump right into this because this is going to be a pretty short video. I've written DD already. I've tried to explain it to people, but I've been basically buried by downvotes and people, saying that I was a shill. But I'm trying to explain to people what is going on with Bed Bath & Beyond and why isn't the stock going up despite being on Reg Show. And I think what we have to do is just kind of dive right in and show you guys what is probably actually going on here. All right. So we all know right now this green little bar right here means Reg Show. It means that they right now are having liquidity problems. They are failing to deliver, which are all these. Let me unhighlight this so you can see the FTDs. These bars right here are FTDs, and they were failing to deliver like 7 million shares in a single day. That's probably most likely brokerages that are probably doing it, because most of the time at this point, the retail is the ones in there. Really high FTDs, right? So you can actually see eventually they did, it looks like, cover in this day, right? So it started moving up, and then we saw the earnings and it was pretty bad. So what we found out from earnings is basically that Bed Bath & Beyond is in dire straits as far as their financials. They were having problems making payments to their creditors, and that is an issue because they were on the verge of having to file bankruptcy. So what ends up happening is the Bed Bath & Beyond board goes out and finds some people to basically take their shares and get some money for them. So it's a form of dilution. So what they did was they put out what are called convertibles, and these convertible preferred shares and convertible preferred warrants basically gave, we don't know exactly who it is yet, but there has been links to hedge funds like Hudson Bay. Was one of the names that's been linked multiple times by Wall Street Journal and Bloomberg. So at this point right now, because we don't have a 13G from one of these guys, we don't know exactly who it is. But we can tell at this point by the price action, because if you actually look at the price action, basically since they announced it, it's been doing nothing but basically going down, right? And you're just taking chunks out. And what this indicates to at least me is most likely whoever, because there were days that during this that the stock market was green and they were still taking it down like 10%. So to me, what this looks like is this is conversion happening. So this is when these funds sit there and they convert all these shares over, and they're putting out new shares, and that increases liquidity, which means that a lot of these FTDs that you're seeing right here are all going to get reset, which means that basically if you were in this for a short squeeze, they're taking away the FTDs. This thing will be off Reg Show in a couple days. And while everyone's sitting there trying to figure out, well, what does the filing mean? Can they do this? Can they do that? Here's the deal. Bed Bath & Beyond, in their filings right here, there's something called a 424B5 prospectus, right? When they put this thing out, and they probably got it signed. They don't have to have it signed. They don't have to show you that it's signed. They already put it out there. That was basically your warning. These guys probably signed it last week, and what this gave them to do, this gave the the hedge funds rights to, is basically converting all this stuff over. Now, at the very end of this thing, there's a signature thing that is not signed on here, but this probably already went through. And I've checked with a couple different places, including Dilution Tracker themselves, and they said as long as they filed this thing and the company signed it, which probably already happened, that's the reason why this downward pressure is happening, is because essentially what they're doing is they are bleeding off the stock and adding more shares into the I guess, they're increasing the amount of shares outstanding because they're converting all these shares over. And a lot of people go, well, why would they do that? Why would they all of a sudden, they could have held them long. This thing could turn around. They could squeeze the stock, right? These funds don't care. They're not in this to try to see if Bed Bath & Beyond will, turn around. These guys are going to make between 8 and 13%, and on some of the warrants, I believe 5%. So in some of them combined, because they're like combo warrants and preferred shares, they'll make 13% on them. So they're able to convert these things for a fixed amount of money and make money this entire time. It doesn't matter what the price is. So that's going to send, obviously, the stock with downward pressure. And what's going on here is once they sign this thing, they don't have to file the 13G for 45 days. So by the time retail realizes what's going on with this stock, there's already going to be like 200 million shares outstanding, if not more. So they're going to 2x the float, if not 3x. We'll see how much dilution ends up happening, because this is all like weighted by the the 10-day VWAP, which I think actually they put in here. Yeah, so they have a floor. So there is a floor at least, which is 72 cents, 71.6. So basically 72 cents. So that you can't go lower than that. But in the meantime, they're able to basically see this 92% of the lowest VWAP. That means they have 8% built into every single conversion that happens, right? And they're able to do this up to, and also raise another additional 800 million more in preferreds. I'm telling you guys, retail sitting around going, well, we need definite signs. We need to see the filings before we know this is happening. The price is telling you this is happening. This is already going on, and it's going to continue happening. So the reason why this is not great for retail is because the more shares outstanding, you already had a company that was literally, in rough shape, right? Now all of a sudden, and that was with 100 million shares. Now you're going to have, you already had negative what's called shareholder equity. So if you actually go into a filing, right? So let's just grab their last quarter, right? When you go through the balance sheet at the end, where is it? Right here. So if you actually look, you actually have total shareholder equity. It's actually negative. You have negative shareholder equity at this point. So all of a sudden now you're going to 2x or 3x that float. That's not good. I mean, I can't stress this enough. This is a company that they need a merger or, possibly any sort of like buyout for baby. They need something, or else the current situation is they're going to be in a death spiral where they're having trouble raising money, which means that they have to further dilute. The further dilution they have, the less shareholders' shares are worth. And here are the warrants right here. Like, you can read through them. They have price protection on every single one of them. And these ones right here, these warrants, they're cashless. So I mean, they don't even have to put money down. They can just convert these things. It's not a good situation. And they not on top of that. So say, for example, this thing is getting, all the shares converted. Not, we don't know they're going to convert every single one of them, but there is a lot of, look at this. You can see right here, the current shares outstanding right now, the last time it was filed was 117.32 million. What will end up happening is the next time they file, that number should be a lot larger. They also have this ATM right now, an at-the-money offering for $58.34 million shares. And on top of that, they also have warrants for 400, close to 70, and they also have these 100 million convertibles, preferred. Like, this is just a huge amount of dilution. So that means that every single one of your shares is worth a fraction of what it used to be when you had that much dilution, which will drive down the stock price because they only have a certain amount of assets. So when you start looking at how many shares per asset, when you start looking at book values, this is not good for the stock. People are going, well, you're just, spewing FUD and you're a shill. No, I actually care that retail doesn't understand this. Like, that's the reason why I do this. I don't make any money on YouTube. I'm just trying to stress that if you are in this play, you need to understand one thing. If you don't understand this dilution and what it means for you and your share price, you're going to need to learn real quickly what this all means. Because can the company survive? Maybe. They're going to raise some money from this, right? And the money's not going to go straight to redoing and fixing their business, though. A lot of their money that they're going to get is just going to go to bondholders, so they don't shut down the company basically and say you owe us, X amount of months, that you missed payments on. They're basically having to pay back their bank. So basically what they're doing is transferring wealth. They're basically taking shareholder equity right now, and they are giving it to their bondholders just to stay afloat. Now, the alternative would have been basically file for bankruptcy, and then your shares are worth basically nothing because all the people would have gotten paid first. Because if you have common shares, the most time, by the time bankruptcy happens, your stuff's worthless because they have to pay out any preferred shares first. They also have to pay out bondholders, and by the time they liquidate everything, the last people to get paid are the Class A shareholders. That's just what you learn. So in the event of a liquidation and bankruptcy, basically most shareholders that have regular stocks, like most people, will get nothing. So I'm just trying to stress, I put up this analogy. I'm sitting here watching people in a burning building, and I'm screaming at them going, hey, the building is on fire. And everyone's going, you shut up. You should not, you're spreading FUD. The building's fine. And I'm going, listen, the building is clearly on fire. I'm looking at smoke. It's happening. And everyone's going, you're a shill. Listen, if there is no merger, if there is no magic thing that's going to come through, then this is a situation. You're in a burning building. And I don't care what you do with your shares personally. If you want to hold to the moon, hold to the moon. If you think Bed Bath & Beyond can turn the business around and you're in it for the next 30, 40 years, great. But you just need to know what is actually happening right now because there's so much misinformation out there. There is so much misinformation. I'm sitting here watching people tell people with absolute certainty they know what's happening. Listen, nobody knows with 100% certainty unless you're in this deal on the fund side. But I can tell you right now, I am really confident that this right here is not showing this as a friendly. The market's been having good days during these days, and this is just basically looking like they're diluting. And I will show you real quick. If you look at the other day when everyone was there was a couple green bars and it spiked. And everyone was like, yes, this is it. It's squeezing. It did 5 million on this 5-minute bar, right? That's a lot of shares flying back and forth, right? All of a sudden, it got pushed down, and then at the next candle, it basically just completely bled off, all the way down to a low of 182. You basically went from 213 down to 182 in a matter of an hour and some change. What happened? That's dilution. They literally spiked it to get retail excited, get the volume up, and then they started issuing shares into it and converting them over. This is what they do. You're going to see spikes. And I said this in my DD that I wrote, and everyone booed me. But you're going to see spikes. They don't need this thing to go straight down to the floor. They don't want that. They want to convert these things as fast as possible. And and they're going to make money on every single conversion. So what you're looking at here, when you see these spikes, you'll see a bleed off, and you'll see a lot of downward pressure. And you're going, well, why isn't this thing moving? It's on Reg Show. They should be enforcing this. The squeeze is any day. If they are diluting, the squeeze is gone. That's the honest truth. And if you are only in it for the squeeze, then this now is your reality. Because look at this. They pumped this up, and they just sold off. And you can say, oh, it was just shorting. Guess what? Do you know where they're probably getting their pumps? And here's another theory for you if you want. So why would someone come and get these preferred shares? That's the question, right? So why would they come and get these preferred shares? They would do this because maybe they were short. Maybe some of these funds that are coming through and asking for these preferred shares were the ones shorting the thing. So just wild theory. Say you go to Bed Bath & Beyond, you were short them, and you said, all right, we'll get your preferred shares. What can you do with that power? What you can do is you can close some of your short positions for profit, and then you can push the price down. You can sit there and you can close your shorts out, reset all the FTDs, right? And you can basically bleed out and basically reset every FTD. It will go off reg show at some point. Because, why would you take that risk on a company that has these bad balance sheets? Well, maybe it's because you were short them and now you can sit there and basically close out your position. So at the end of this, right, there'll be off reg show. There'll be a lot more shares out there, right? And maybe they run it back up one more time. It's possible. They close out a bunch of their shares. They do that, and then they reshort it, and then that point they try to push it into a death spiral. I mean, I can just show you right here. You're looking at a lot of downward pressure, and it's not just because algos are on or they're doing swaps or like they're market makers are having to hedge or de-hedge. They are doing those things, but at the same time, this looks like dilution. I mean, basically, look at this. When they got the shares, I think it was probably this day right here, the whole day it basically bled off. The next day, this was probably Monday, right? Yeah, Monday. This is Monday right here. Just absolutely hammered it down. Then they kind of held it around VWAP, a little bit slightly under. And they basically been doing this. It's easy to slap the ask at the end of the day. Maybe they cover some at the end of the day, and then they push it up in the after hours and pre-market, and then they can slap the ask, send it up, close some shorts, and then push it back down. Obviously, that's a theory, but I'm just saying, it's not that far-fetched to think that maybe these guys aren't the good guys. I mean, if you think these are the good guys, then why is the price going down so much when the rest of the market wasn't going down until today? I mean, and they pushed it up at the end of the day. The market didn't do this. They're basically it's like being on a downward treadmill. Like you're running in place, but it's like you're not making any ground. And so the reason why that is because the shares outstanding are probably growing. So I'm not going to sit here and sugarcoat anything. I'm just telling you right now, can you have one more big spike? Possibly, if they decide they go long on it for a second and then they close out. They already have the warrants to hedge in case that runs. So I'm just pointing out to you guys, you need to keep an eye on this. Eventually, what you're going to see is this thing's going to drop off reg show. The FTDs are going to shrink, and then the shares outstanding, all of a sudden, you're going to wake up one day and you're going to see a filing, and the shares outstanding have grown significantly. And you're going to go, wait, what happened? And you have to remember, there's a ton of people that are sitting there going, hey, someone told me, at least somebody told me what was going on. I didn't listen to them, but at least somebody was out there trying. That's what I'm trying to do. I got to go. I'm going out to dinner tonight. But I was going to say, I want people to at least understand that this is most likely sitting there going through dilution. And that's the reason why the price isn't going anywhere. Despite all the volume, there's a ton of volume. Whenever you see really high volume and these convertibles, I remember Mullen. I watched Mullen do this exact same thing. It was like 140 million in volume on a stock that had 23 million because they were converting all the convertibles over. So I know there's plenty of other people that covered that, but you need to go back and look at some of these other stocks that have had these convertibles. BBBY was one of them. Mullen was another. Anyone that's had these convertibles, the story always is the same. You will see. This is the last thing I'll do because I hear my wife yelling for me. You can sit here and watch 23 million shares outstanding. All of a sudden, it went to 284 million in a matter of a month. This is the kind of thing they give you 30 days. Look at this. This is December, basically January 1st. And look, this is the end of March. They went up over 250 million shares because of those convertibles. And they still have more. Look at BBIG. Same thing. They had almost nothing. And then all of a sudden they grew from 30 to 107 up to 150. These convertibles are toxic. And the only reason BBIG's management had to take them was because they had no other choices. My guess is they were getting lowballed for offers on baby, and it's because everyone knows most of the time when you negotiate from a position of strength. When you have to negotiate from a position of weakness, every single shark and wolf out there is going to eat you. So you have to do what you have to do to stay alive. And for them, that was basically issuing out these convertibles. So I hope you guys have a great evening or morning wherever you are. I know this is probably not good news for a lot of people, but I just want you guys to understand where I'm coming from, why I'm trying to share this with you. I don't even have a position on this anymore. I was in this thing. I thought it was going to squeeze to the moon just like everyone, and then I saw the earnings, and then I saw the filings, and I'm telling you right now, I sold on earnings because I saw that they had 230 million cash burn and they had no money. And to me, that just was a recipe for disaster. So I took my losses and I sold. You can call me a paper hand, but I'm telling you right now, I got out at a lot better price than a lot of people. So you guys stay safe. If you have any questions, there's a link for a Discord that's free. This is where we talk about all this stuff. We go over filings together. You're more than welcome to join us. So if you are tired of listening to people telling you, not to worry, then you should probably take a look at least to the other side and see people that are actually going and being realistic about this stock. Okay, you guys have a great evening, and I will talk to you later.